on Deep Dive, wherein Hiral tries and brings some of the, throw some light on the longer term implications of moves that companies have made. Well, is it possible to predict the long term that much enough at the market-wide basis? Let's ask that question to Vaibhav Sanghavi, CEO of ASK Hedge Solutions, ASK Hedge Solutions, excuse me. It's been a while that we've spoken to Vaibhav. Vaibhav, great having you. Thanks so much for joining in.
Thanks, Raj. Always good to be on your show, yeah.
Yeah, same. Great having you. Vaibhav, are you long, are you short currently? And what would the reasons be for either of those actions?
See, typically, ahead of any big binary events, as a strategy, we generally would go highly hedged. You're not taking the call on the outcome of the event. Similarly, in this case, as per yesterday's Fed kind of event, we actually were highly hedged. Now, what has come out of Fed is clearly, saying that, okay, the growth is pretty decent, probably inflation a little sticky on the core side. The sense is basically that the dot plot is kind of likely to have reduced rate cuts going forward, is when the markets have kind of taken beating in that sense on the immediate reaction perspective. Having said that, if we look from a holistic perspective, it does indicate that if the market or the economy is stronger than expected and you have avoided the recession in that sense, and in addition to that, when Trump kind of comes about, we may see some amount of corporate tax reduction out there, tariffs kind of increase. All in all, it will continue to be positive for US economy and corporate earnings. Now, in that case, the trend which has started in the last month, where we've seen good amount of flows kind of going out of global economies towards US, that may continue for some amount of time. And especially when we talk about India, when we are looking at a quarter's earnings, where my sense is basically, although it may be a recovery from the last quarter, but still would be on the weaker side. We would be looking at not very aggressive kind of FPI flows coming in. And lastly, the budget is also there. So let's wait and see what comes out of that as well. So some amount of anticipation, some amount of realignment of flows would likely to continue to see that the volatility will be elevated.
If that is indeed the case, Vaibhav, would a largely risk of low leverage, low position sizing strategy work best, because uncertainty can hit from anywhere over the course of the next 45 days at least, because of the packed nature of events, right? I mean, Trump presidency is one, as you said, a Q3 earnings season, the budget, and a bunch of other things happening.
Of course, Neeraj, I think what we always do generally is whenever we see the elevated levels of volatility, and it's not about us, it's about global funds who will be looking at the risk measures. Whenever the volatility kind of remains at elevated levels, then the obvious reaction to that would be degrossing of your books generally. Now, when we talk about, as I mentioned, that the volatility is likely to be a little higher, and the markets also, our markets from on a technical standpoint, are also adjusting to the new regime of week, only 2 expiries in a week, and we've seen some volatility kind of increase, from that perspective. I think better would be to stay put, stay highly hedged. Discretion is always better part of valor in that sense. So we will wait, let these events kind of go by, because we are in no hurry, and we being an absolute return fund, I think we keep focusing on the absolute return rather than on relative return. So we'll stay light.
We'll stay light. Okay. Within that positioning, Vaibhav, where is it that you find favor, let's say, for people who are can't do both, right? As either the permit is not there or they don't know how to play short very well and therefore are long only, let's say. And a lot of retail investors would be long only in specific stocks which are not derivatives per se. Where would you find favor? I mean, where is it that you believe that despite all the uncertainty, the positives or the probability of success on the long side is much higher than the probability of failure? Which themes?
See, I think few themes for sure is one that, when we look about that US economy is doing relatively better, then any sectors which are exposed to US, and especially if you see on the IT side, um, here is a sector where we do think that from a business perspective, we've kind of bottomed out. At the same time, you have, currency starting to get in favor purely because, not that we are playing on currency itself only, but that is another variable which is kind of supporting this kind of sector. And lastly, that looking at the commentary from an IT company, the discretionary spend, which was elusive till date, there are some amount of green shoots which are kind of coming about from that perspective. And lastly, if the corporate tax reduction happens in US, then there is a chance of higher IT spending as well going forward. So all in all, we do think that from a valuation perspective, from business, bottoming out perspective, and other few technical variables kind of supporting this sector, I think this would be a relatively better one. Although we know that the December quarter numbers are generally weak purely because of the furloughs and so on and so forth. So in spite of that, I think on declines, I think this is a sector to watch out for. Second, I think from consumer standpoint, which has been completely out of favor, in the last 6 to 9 months, our sense is the first positivity may be looked at consumer durables. And then I think from a medium to longer term perspective, in this weakness, of consumer staples, if we get at a sizable correction this segment, I think this is purely for a longer term perspective, not an immediate short term kind of trade perspective. I think that can also be looked at, from investing perspective. Lastly, CDMO players, pharma players can be trade opportunities along with renewables. So these are the sectors, from a long side, we do think that gives you a relative better, opportunity.
Okay. There's a bit of a hiatus that, let's say, defense took, right, after having a very amazing 2023, if you will. Now, there are a lot of talk, Vaibhav, around how that sector, which anyways had a very strong book-to-bill ratio at all times, will now start getting bunched up orders in Q4. We've seen first signs of that in the last 15-20 days. Valuations have come off a little bit from the peak, but that doesn't mean anything because they're still maybe slightly expensive. Is it a sector you would relook at if you had ever looked at it in the past, or are there better places available?
So, Neil, I think let's take a little step back, when we talk about defense, because from a defense perspective, and we would look ideally at the whole PSU, as a segment where we clearly think that those PSUs which are backed by reforms versus those PSUs which are cyclical in nature and have just rallied in the last 2 or 3 years just because that every PSU has been rallying. We do think that there is a very good trade in that. And when we talk about defense, that's a sector I think is strongly backed by reforms, Make in India campaign. I think this is a sector, at declines, you will continue to find interest here. Of course, because the overall sentiment from a PSU basket is slightly weaker, you will see that volatility. But I think this is a sector one can look for from a medium to longer term perspective. But those guys who have an appetite for looking at those kind of intra-month volatility as well. So, but from a business perspective, I do think this is a segment will continue to have some amount of interest.
Okay, Vaibhav, one final question. If indeed if China were to lose US as a major market and therefore dump goods across the Asian region, which sectors do you reckon, if you've thought about this that way, which sectors are the most vulnerable and therefore should be avoided? Sure, it may not happen and then things may do well, but are you preparing for that possibility and therefore are you staying away from some stuff?
See, I think it's an interesting one because, if you look at the previous Trump kind of period, which was there for 4 years, we clearly see that tariffs are used as a negotiating tactic. My view is basically that you talk about higher tariffs, come to the negotiating table, and then kind of negotiate a good, appropriate trade deal subsequently. And now, when we look at balance of payments perspective, or probably in country to country balance of trade, in that perspective, my sense is basically, of course, China, Mexico, and Canada will definitely face some sizable drought. But in case of India, maybe, and this is my analysis, is basically that to compensate for the net exports which we have, you may see some amount of either defense or technology kind of imports coming from there, to just kind of give that impression that the trade is bilateral, and we want to work very closely with kind of US in that perspective. So yes, we will be beneficiary in terms of very high tariffs in all of those three top countries which they have trade to. Natural beneficiary we would be there, and in that there are many sectors which can kind of stand to benefit.
Okay, well, some beneficiaries and some losers. That will always be the nature of the day. But out of time completely on this show. Maybe we'll reserve this for the other time when we speak to Vaibhav again. Vaibhav, thanks for joining in today. Season's greetings to you and everybody. And viewers, thanks for tuning in to this leg of India Market Open.